Good day everyone, welcome back to the channel. Today's video we are going to look at ThinkMarkets boom and crash pairs, the synthetic pairs, on how they look, and best of all, you can trade them directly on TradingView as well through the ThinkTrader platform, and you can also trade it on MT5. So this is pretty cool. Let's go through their boom and crash pairs and let's quickly have a look what's it all about. So really quickly, let's just talk a little about strategy. So this strategy I trade basically every single time. When we have price action going like this, right? So then again, I'm going to sell, crash and buy boom. So if this is the market structure, right? We want to wait for some sort of liquidity sweep to happen on a higher time frame. Your higher time frame is your higher time frame. If you are a scalper, your higher time frame can be an hour. If you are a swing trader, your higher time frame can be the daily, so we want a higher time frame low to be taken out. We want to wait for a market structure shift to happen, right? We are going to look for some point of interest right over here, like a fair value gap, an inverse fair value gap, an order block, a breaker block. So there's a bunch of things you can look at in regards of where you are going to catch your trade. And also as an extra confirmation, we can draw our fib from the low to the high. I'm going to quickly do my fib setting so you can exactly see what my settings are. This is default, as you can see. So I'm going to show you how my fib settings look. Let's just make it nice and clear. So there we go. Take a screenshot and then let's get back to the video. So these are my fib settings. So you can use the standard fib settings, and this is the strategy. So we wait for a liquidity sweep, for example, liquidity sweep, market structure shift. You can draw your fib from this high to this low, and then you want to enter basically anywhere in our golden zone, like the 0.5 and 0.78, and then you are going to find a point of interest like an order block, fair value gap, breaker block, all of those type of things. And we're going to target the next level of liquidity. So really easy, simple strategy. Really easy, simple strategy. So I think let's go straight to the charts and let's have a look on how ThinkMarkets synthetic pairs goes. So here's a chart. We are on the 30-minute. So let's use this example here so you can exactly see how it works. We are on ThinkMarkets, the Boom 1000, 30-minute right over there. So here we can see we took liquidity right over here. We had a big push up. We took out this high. Price reacted from this order block zone right over here. Let's just mark everything out so you can see how I process the trades. So we inside of this zone, we got a retrace. So let's quickly draw our fib from this higher time frame low to the higher time frame high right over here. Let's just mark out the 0.5 and the 7.8 zone right over here. Let's delete the fib. So we want entries as soon as price comes into this zone right over here. So we can immediately see we have a order block resting right over here. This order block resting right over here. We have nice liquidity that's actually being accumulated right over here. So this means we want these lows to be taken out, right, before we start looking at a trade into our point of interest. There is a nice fair value gap resting right over there as well. And then you can see price reacted to the order block. So now you don't want to enter just on the first order block you see. Because if you enter right over here, at least your stops needs to be below this low or below the order block, right? And then you can target the next level of liquidity. That's right over there. So yes, that is a really good trade. Not all trades is going to be as good as this one right over here. So what we want to do, we want to jump to the lower time frames to see what happens. So let's first go to the 15-minute. Let's see if we can see something. Let's go to the 5-minute. Let's even go down to the 1-minute, right? For those sniper entries. So now what we can do, we can just extend this 30-minute liquidity pool right over here, right? We tapped into the order block. So guess what? We took the liquidity already right over here, okay? Now there's an extra level of liquidity that's being taken, okay? We had a market structure shift happening right over here, okay, on the 1-minute. You can draw your fib from this low to this high. We want to mark out this zone right over here, okay? Let's delete it. Okay, what do we have inside of the zone? We have a bunch of fair value gaps. So I'm just going to mark out that whole zone, fair value gap, and extend it, okay? And we also have an order block zone right over here. So we entered right over here. You can now, from your stops, right, look at the difference. You can now enter your trade right over there because we had the liquidity sweep. We inside a higher market, a higher POI, the 30-minute. We had a 1-minute break of structure. We drew our fib into our golden zone. We have a bunch of fair value gaps resting right over here. We have a breaker block right over here. There's a bunch of inverse fair value gaps resting right over here. So now you can put your stops below this low, okay? And you can target the same liquidity that you targeted on the 30-minute. And let's just see where that was. It was this one right over here early in the video. So now, do you see the difference in your stop loss? Soon, without going to the lower time frames, your stop loss was there or there. Now it's literally right over there below this low. And there you target the same level, but your risk to reward is so much higher when you scale down. Now, exactly like this, we are inside of a inverse fair value gap, and order block. So let's mark out this zone right over here. Okay, let's jump down back to the 1-minute. Let's see if there's anything right over here. Let's just zoom out again nicely. We took higher time frame liquidity. So this was our target initially. Now it becomes the liquidity because we have a nice POI resting above here. Price enters our higher time frame POI right over here, right? You have smaller liquidity that's being taken. Here you have that break of structure, okay? Because this low was the one that created this high. So there's two different type of entries you can take. A more aggressive entry. Where was the highest point? It was this candle right over here. Where was the low that created this candle? It was this one right over here. So that's a more aggressive entry. You can draw your fib. And as you can see, when you draw this out, there's an entry right over there. We have an order block, fair value gap, enter your trade, stops above these highs. So you enter right over there, stops right over there. And then as you can see, price went all the way down again. to this level where this order block was right over there. So let's say you did not enter an aggressive entry like this. You want to wait. So we had our break of structure right over here, right? Now you can draw your fib from this high to this low. You can mark out your zones right over here. Okay. There's a bunch of fair value gaps resting right over there. As you can see, price didn't really react. So if you entered here, there's nothing wrong with it. You followed the rules. You would have gotten a stop loss right over here. Okay, stop loss hit. Now again, this was the high. Look what happens right over here. Okay, we took out this high right over here. We had a liquidity sweep right over there. Okay, where was the low that created this high? It was this one right over there. You can even use this one as an aggressive one. We had a break of structure. Okay, you draw your fib. You are inside of this zone right over here. And it overlaps with a nice order block, and you can enter your trade right over there, stops above these highs, and then you can target your next level of liquidity, and it will be this one right over here, and price is currently there. So yes, you took a small loss there, you gain one right over there, and you got a nice big trade right over here as well. So 2 winning trades, 2 losing trades. Again, Think Markets has boom 1000, boom 300, 600, crash 1000, 300, 600, and then they also have volatility pairs as well. So you can trade directly on this platform, ThinkTrader, through ThinkMarkets. It's integrated with TradingView, as you can see. So here you have your sell and you buy, your buys, order tools you have with TradingView. You have your account options where you can choose between demo and your live. Literally everything like TradingView, so you can trade directly on TradingView charts with ThinkMarkets. So, and also go check out the cool synthetic pairs that I have. I think I'm going to start trading these pairs definitely a little bit more. As you can see, they respect really nicely like the price action. So let's actually see what instruments they still have. So let's quickly just type in synthetics, volatility, sorry. There we go. Jump, Think Markets volatility right over there. So there's another 2 synthetic pairs. So let's look at volatility 75. Let's go quickly to the 30-minute. Beautiful. So you can trade it on weekends. As you can see, really clean price action. Yeah, just go have a look on Think Markets, have a look at their synthetic pairs. And then, yes, I hope you enjoyed this video. Please leave a like and subscribe if you found this valuable with the strategy and everything as well. Link is down in the description if you want to check out Think Markets. And then we'll see you in the next video. Cheers.